Hello, people. As we drive, we got to talk about the economic status and how it relates to crypto. We got CPI reports today, and we also got a little bit of news from the China-US trade talks. So let's go over it bit by bit. I did a kind of like a preview of this last night, but now since we've actually got the numbers, let's go over it. So CPI first. We did come in at 2.4 and 2.8 for overall. And not only for overall, but we did come at 2.8 for the core. So the core didn't actually change. The overall went up by 0.1 from 2.3 to 2.4, but this was expected because it's year over year. And last year in June, or last year, the May report was very, very low, so it's not surprised that it went up a bit. The tariffs so far have had very little effect on the actual inflation rate, but that was also expected because most suppliers actually bought several months of inventory when Trump first announced the tariffs, and they bought at pre-tariff prices. So they're going through that inventory right now. And what the report said is like the effect of the tariffs will actually be kind of factored into the economy over the next 6 months. So expect some inflation on that over the next 6 months. However, there is a new danger for the crypto market in terms of inflation, and that comes in the Middle East, and of course it has to do with Benjamin Netanyahu and Iran. The tensions have gotten bad enough where the US has withdrawn its embassy, well, halfway withdrawn its embassy from Iraq, and any dependents of military personnel were advised to leave. So the tensions are actually heightening up. Now, why is this important? Well, unlike the war in Ukraine, this will actually affect global oil supplies. And that's why oil on the global market went up 4%. The global oil price went up to 67, and Brent went up to 69. So it's crawling back up to around 70, which is what it was before Trump got inaugurated, and about the same price when Trump actually got elected. So expect oil price to rise maybe about 20 cents in the United States, back to kind of like where it was when he got inaugurated. Now, the decline in price of oil because OPEC's increased production over the last couple of months will probably be offset by that. Now, the good thing is OPEC has actually agreed to keep its high production until September. Now, a war in Iran might disrupt that, but I'm not really all that sure about that. But that will actually be offset by the tensions in Iran. And I'm assuming that hostilities will probably be present because Israel really doesn't like Iran, and we all know that Benjamin Netanyahu is kind of a warmonger. So that's probably going to be there, and I do think the U.S. will support Israel because the U.S. also doesn't like Iran, and the U.S. pretty much always supports Israel, no matter what they do. So, and that's another like political discussion for another time. So if there is conflict and like, you know, the Straits of Hormuz are actually closed, then I expect oil prices to actually go up, which will affect the rest of the economy. Now, part of the reason that inflation has been lowered recently is because of OPEC's increased production, and oil prices have actually been low. If it wasn't for that, we'd probably still be back up at 3%. So the thing is, like, since that's going to be countered, I'd expect inflation in the next couple of months to go up from that. Plus, the effect of the tariffs will actually take place as these companies run out of stockpiles of their supply before the tariffs took place. Now, in terms of the China-US trade talks, oh, and besides, because of this oil stuff and the fact that inflation is probably going to go up because of the oil and because the tariff effects are going to come in, it is less likely that Powell is going to cut rates. So there's going to be no cut for June. If you look at the prediction markets, they're expecting about a 67% chance of a cut by the September meeting, including the September meeting. But I don't know if that's true or not. I think they're seriously overgauging that because of the both the tariff effect and the oil effect coming in June. Powell is very, very careful, and that's like 3 meetings away. So a lot can actually change at that time. My guess is like September is going to be the make or break month. If he doesn't cut in September, we're probably not going to get a cut all of this year. And Trump kind of shot himself in the foot with the tariff stuff, because if he wanted rates to go down, he wouldn't have actually started the trade war until the rates were actually cut. So the thing is, like, I actually, at this point, give it a less than 50% chance that he's going to cut by September, unless he says something that I'm unaware of in the next FOMC meeting, but the markets are basically pricing in a 0% chance cut for June. And maybe they're wrong, but I think overall they're right, and the Fed is going to be very, very careful. They're not going to be pressured by Donald Trump to actually cut rates. The other thing is with the China trade talks. We basically went back to where we were in May, because in May we did extend the 90-day tariff extension, and we didn't really make any changes to that. But afterwards, the two countries accused each other of breaking good faith. So what's actually happened right now is that, China said we're not going to give you rare earths, and then America kind of has a advanced technology chips ban on China for a long time. So in return for us sending us rare earths, we are agreeing to export them advanced chip products. Now, I don't think we've actually exported advanced chip products to China for some time, but that was the trade-off. But the tariff situation actually hasn't changed since we agreed to the extension back in May. And that's not a permanent solution. I don't think this agreement will actually last this long. I do actually think that eventually, probably within a short amount of time, both sides will accuse each other of breaking good faith again, and this whole thing will rupture apart. Added to the fact that Bessent is already talking about having an extension of the trade war pause for other partners that have negotiated in good faith, you can tell right now that the trade negotiations aren't going as fast or aren't going as well as planned. So there aren't any great new trade deals, and I don't think our trade partners are really going to agree to give us any real kind of concessions, even temporary ones, with the trade deals. So I expect trade tensions to be high. That added with the Middle East and the overall impacts of the tariffs, I really don't think inflation is going to come down to 2% anytime soon. And in fact, I think it's probably going to go back up towards 3%, if not surpass 3%. People's expectations of how the economy is going to do is not that great either. It is a little bit better than in early or mid-April, but it's still very, very low, which means people aren't really going to buy alts. And coupled with the fact that we may not even get an interest rate cut all of this year, I think the prospects of an altcoin bull run have dimmed a bit. I am still hoping for one at the end of the year, but the prospects are getting worse and worse every time I look at the economic factors. The one thing is unemployment is actually starting to rise. I mean, it's still 4.2 right now, but the jobs report is not improving, and the new jobs added every report is actually getting worse and worse. It's below expectations, but that's kind of what people are expecting. So it's below the official numbers, but I don't think it's below street expectations. But however, every month they do actually revise it downward after a while. And remember, the government is going to be consistently bleeding jobs for a while because there's a lot of lawsuits. Some of them are going to go in favor of Trump, although most of them are going against Trump. Some of them are going to go in favor of Trump. So the government worker kind of bleeding is going to continue for a while. And I don't think there's too much to actually offset that right now. So the unemployment rate going up to 4.3, 4.4 eventually might force Jerome Powell's hand, but not if inflation kicks back up in July. I think inflation decreasing the last few months, I think that period is over, because I think oil prices are rebounding because of the tensions, and the trade war tariff stuff is going to start to kick in your everyday prices. We've heard reports from farmers in the southern states that non-immigrants and both black and white and non-immigrant Hispanics, they're not willing to work at the farms that the immigrants were willing to work in, and that's going to cause the price of fruits to actually go up. But that's a very small part of the economy. But overall, just the tariffs on imports, it's pretty much always the importer that actually pays the tariffs, and they're going to pass a lot of the tariffs on to the customers because retailers don't have huge margins. You might think that Walmart makes huge amounts of money on everything they sell. They only make a large amount of money because they sell a lot of stuff. The profit on each individual piece of stuff they sell, it's probably less than 10%. So they're not going to be able to eat the 30% tariffs. And the Chinese importers, they're not going to help you pay the tariff either. So it's going to have to be absorbed by the customer. And like I said, Walmart already built up large inventories beforehand. to offset the tariffs for some amount of time, hoping that there's going to be some kind of glorious trade deal. But there hasn't really been any glorious trade deal, and their inventories are running short, not only Walmart, but other companies as well. So in the next month or two, you're going to see a lot of these price increases. So I do think inflation is going up. I don't think the Fed's going to be too friendly in cutting rates. And I think like when you're looking at the betting markets, as the July and August numbers roll in, I think you're going to see the chance for a rate cut in September go down substantially. So right now, what I'm saying is right now the situation is the best to be a Bitcoin maxi that it has been in a while. And why is it good to be a Bitcoin maxi? Well, it's because Bitcoin, Michael Saylor and others are going to buy Bitcoin no matter what. They're not really going to look at the economy. They believe Bitcoin's a hedge for inflation. No one looks at alts that way. And even though some alts like Solana, XRP, Cardano, Hedera, and a couple of others do have like some corporate commitment to buying it for the treasury, it's not going to be enough. Bitcoin has so many buyers, tens of billions of dollars committed. A couple hundred million or a billion committed in the case of Solana isn't going to be able to keep up. And investors are going to sell altcoins way before they sell Bitcoin. So I would say like at least be a Bitcoin maxi until like September, October. Maybe you want to get back into alts in September essentially. Because the ETFs are actually coming out, maybe there'll be a little bit more institutional investment in alts. Don't get confused by partnerships or utility or that stuff. That stuff has really never mattered for price, and I don't expect it to right now. Don't get caught up in the hype. And I think right now, if you're investing, Bitcoin's a solid way to go. I think you're going to make money with that. And if you want to make money with alts, I would wait until the fall or the winter for more news among the alts, because right now I don't think the market favors the altcoins. So yeah, right now is a good time to be a Bitcoin maxi, probably for the next 3 months, and we'll have to reevaluate after that. So let me go after this roundabout. Like and subscribe, hit that bell notifications button. I hate roundabouts, by the way, and I will see you guys later.